Today we are going to be talking about Alibaba and their upcoming earnings. We will also discuss Alibaba selling off a portion of their business and go over some bullish catalysts that could affect the stock in 2024. And we will leave off the video by taking a look at Alibaba's valuation and where it has averaged over the last 5 years to come up with a price target for the stock. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Alibaba is a stock that continues to get beaten down month over month, and in just the last 6 months, this stock is down over 25%. And in the last year, it gets even worse, down almost 32%. And in the past 5 years, even though the business has grown very nicely, the stock is still down over 50%. From its all-time highs of around $310, the stock has traded down over 75%. And over the course of the last year or so, Alibaba has tried to show investors the value of their underlying businesses, and they have done this through a number of different methods. They talked about splitting the business into 6 different business units. However, that ended up falling through, and what it looks like they're trying to do now is actually sell off some of their consumer assets. This includes selling off of their grocery store business Freshippo, as well as their retailer RT-Mart. Currently, they are just in talks with a number of potential buyers. However, they are primarily trying to restructure the business to focus on their core e-commerce business instead of some of these non-profitable side businesses that they've taken on over the years. And personally, I like this move a lot because I think in China over the next 10 years, we are going to see a lot more growth in AI, cloud computing, as well as some overseas expansion into e-commerce. We are starting to see Southeast Asia grow rapidly, especially in India and other countries in Southeast Asia. And I think Alibaba focusing on those different sections of the business are going to provide a lot of growth into the future. One thing you have to keep in mind with China is they are not as technologically advanced as the US. And what that ultimately means is over the course of the next 10 years, as they play catch up to the US, we will start seeing more and more cloud computing as well as AI technology being adopted in China and used by businesses throughout the country. And what that will ultimately do for Alibaba, as they are the front runner in those industries, will allow them to grow and really expand their market share. And the hope is that those growth factors will affect Alibaba's top and bottom line numbers in a positive way. They are expected to announce their earnings on February 7th and come in with an EPS of around $2.68 and a revenue of around $36.8 billion. And Zacks has an earnings estimate that is slightly higher of $2.73, which would actually be a decrease year over year of around 2.2%. And for this year, Zacks expects earnings to come in at $8.86, which would be an increase of around 11.6% year over year. However, what's surprising is for next fiscal year, they're actually expecting EPS to drop to $8.57. So personally, I think these estimates could be a little bit low, but first I want to take a look at the quarterly numbers. And here on Yahoo Finance, they have an average EPS estimate for this upcoming earnings of $2.69. That would be a slight decline year over year from $2.79. However, if you look at the last year, analysts have not been able to predict Alibaba's earnings accurately. All of the last 4 quarters, Alibaba has beat analyst expectations, and a year ago they beat by almost 20%. And if we be a little bit conservative and say that Alibaba could beat their earnings expectation of around $2.69 by 15%, that means that they would actually put up an earnings number of around $3.09. And Zacks actually having earnings decreasing year over year, I think is way undervaluing what this company is going to do. I think in 2025, they could be putting up $10+ of EPS. And Yahoo Finance for the current year has an EPS estimate of $8.98, a low of $8.27, and a high estimate of $10.46. I think it would be hard pushed for them to hit this $10.46. However, I think in 2025, that will definitely be achievable, with Yahoo Finance having an average EPS estimate of $9.61, a low of $8.27, and a high of $12.59. And for Alibaba, EPS has been trending in the right direction. We can see from the end of 2022 till now, they have gone from around 92 cents of EPS for the trailing 12-month period all the way up to $7.13 of trailing 12-month EPS. And they're starting to get back close to their all-time highs of around $9.37. Remember, these are GAAP EPS numbers versus the non-GAAP EPS numbers we're seeing on Yahoo Finance. And Zacks actually has a slightly higher revenue estimate for the quarter. They're expecting revenue to come in at $37.21 billion, which represents an increase of around 3.6% year over year. And they have revenue growing by around 5.2% this year and 7.7% next year to $142.76 billion. And Yahoo Finance has their revenue estimate for 2024 coming in at $131.56 billion, which is a little over 8% growth year over year. And for 2025, them putting up a revenue number of $142.89 billion, again, a little bit over 8% growth year over year. So personally, I think the top line growth for Alibaba will accelerate over the next 2 to 3 years. Previously, before 2020, we were seeing growth numbers in the 30% range. I think if they can get to 10 to 15% over the next 2 to 3 years, that will be a massive step in the right direction. We saw over 2022 that they were actually experiencing negative top line growth. However, over the last 2 quarters, we have seen year-over-year changes in the positive direction, and I think that will continue, and those numbers will continue to go up. And a big factor in my personal estimates around Alibaba, especially for EPS and revenue numbers, is considering the Chinese government stepping in and offering stimulus that are going to promote growth and spending throughout China. Obviously, if we see them fall deeper and deeper into a recession, it's going to be harder and harder for Alibaba to hit their numbers. However, if we start seeing stimulus coming into the economy, that would be a big catalyst for Alibaba. Another positive thing for Alibaba's stock price is the fact that they no longer have this large selling pressure from SoftBank. SoftBank at one point in 2021 owned 32% of the company. However, they have reduced their position all the way down to around 0.5% of the company. And not only that, but Alibaba is also spending a large amount of money repurchasing their own shares. They spent $10.2 billion in the last 12 months on buybacks. And this has dropped their shares outstanding by over 3% year over year. And now they're sitting at less shares outstanding than what we saw in 2019. And we have also seen Jack Ma and Joe Tsai purchasing shares of the company. Jack Ma purchased around $50 million worth of Alibaba stock, and Tsai purchased around $151 million worth of the company. And this is massive because a lot of these founders of the company have been turned off by regulations from China, and the fact that they are buying back in and buying large portions of stock shows that they have faith not only in the business, but also a lack of regulation and more freedom to operate within China. And as we mentioned earlier, cloud is a major growth vector for Alibaba. The Chinese sector is expecting cloud to grow by around 18.7% year over year until 2028. And with Alibaba accounting for 34% of the cloud market in China, they are the #1 players. And if people are coming and looking for cloud business, they are first going to turn to Alibaba. And one of the most attractive things for Alibaba is its forward P ratio, which is currently sitting at a 7.57. However, over the last 5 years, Alibaba has had an average forward P ratio of 18.15. And if investors were to value the company at its 5-year average of 18.15, that would cause the stock price to go up to around $172, which would be almost a 140% return from the current stock price. And personally, I wouldn't even be surprised if Alibaba were to trade at a forward P ratio of 25. That would result in the stock price going to $237, which would be a 230% return from the current price. So keep in mind that there are a lot of assumptions being made in this video. I think the biggest one being around the Chinese economy and where it could be headed in the future. I personally believe that the Chinese government is going to step in and try and stimulate their economy by either lowering interest rates or maybe even offering stimulus checks. And this will have a huge benefit on Alibaba's business. But do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.